Is it game over for big tech stocks? Well, we could take a look at the cues right over here, and let me just tell you, that is not a crash. It's still in very bullish context as the price action just slightly pulling back. So we're going to discuss what are some of the big names that you might want to pay very close attention to. We're going to talk about some rotation that we're seeing. We're going to map out targets on the S&P 500 and on the cues using the daily and the 15-minute time frame. Going to go over a couple of indicators as well to determine potential changes in trend in today's Stock Market Brief Show. If you're new here, Monday through the Friday, we do the show. All right. If you like technical analysis, intermarket analysis, make sure to subscribe. Thanks to all the Patreons that support this channel over here. It's $9 a month. It gives you trade ideas, give a watch list, which, by the way, I think I'm going to be updating this watch list to a different thing. I'll talk more about that later to my Patreon group. We do monthly expected moves, weekly, daily expected moves, and much more. If it wasn't for my Patreons, I wouldn't have been able to leave my full-time job to bring out this content Monday through Friday. So we're going to hop right into it. We're going to look at the snapshot of the overall market after my quick little pitch right there. Utilities. Hey, what's up, utilities? Peeking its little head in. I will say, I don't have the chart right now, but the rate of change between utilities and SPY, 4-week rate of change, if you look at Michael Guyad's beta rotation strategy, it is starting to creep up into positive territory. And when it does that, utilities typically outperforms the SPY. So that could be one to watch moving forward. You also have consumer staples up there too as well. Now, what's interesting is, it is kind of a non-event day, relatively unchanged. But if you take a look over here, big tech, right? So Nasdaq got hit, and also the Nasdaq 100 got hit. That's big tech. Meanwhile, the VIX, 30-day volatility, which nowadays means nothing. At least it feels like that. You can see that it is still heading down over here on that weekly chart, and you can see we filled this gap. We still have that one underneath us, but I will say there is a hidden gap up here at around 45, and I posted this on Twitter. This is back from 2020. There is a hidden gap still above us, and a lot of times these gaps get filled. So, hey, potentially, if the VIX all of a sudden fires off like a rocket ship, pay attention to this level over here on the VIX, which is around 45. If it gets filled, hey, maybe potentially that might mark a short-term bottom, or maybe a long-term bottom. We don't know. Let's take a look at the heat map. So, Tesla was up big the other day. Now it's down big today. Wow, and we'll talk about that on the chart specifically. Then we also have Google, which was down a whopping 2%. You had AMD, which was down big. Intel, that was down big as well. You can see split, right? Split down the middle. So you have rotation. This is clear rotation, and I'll show you what I mean by that on other visual charts. But this could be the start of something, right? Where you start to see the big mega cap go down, and then you start to see the smaller names all of a sudden catch some bids. Before we get into the rotation stuff, let's take a look at Tesla. So I redrew this channel. I drew it a couple of ways. I feel like this is the more, the better way now, as we have multiple points, right? 1, 2, 3, and now we just hit 4, 4. And then down here, 1, 2, 3, we, boop, undercut, boop, came right back in. And then the middle of the channels acted as resistance and support multiple times too as well. Okay, I want to call out something interesting here. So we have what's known as a bearish engulfing candle on Tesla. Okay, and typically bearish engulfing candles, that is known as a 2-bar reversal pattern. So you get a strong move up, you get the bearish pattern, and it potentially pulls back down. But you need to obviously see, right, continuation. Now, what I will call that I found interesting here is that when we reached the last, so not only this time, but this time here and this time here, when we came up into these areas, take a look at the candles. And if you can't see it here, bring up your own chart, all right? But you saw I'm going to draw it like this. You saw one big green authoritative candle into this trend line. And the next day, it was followed by a big authoritative red candle. And you can see, yeah. And then right here, and those all marked reversal and turning points in Tesla. So, will we get continuation? If we do, it's not like it's a straight move. You get a lot of head fakes like this one down here, and then we came almost all the way back up, and then we saw weakness, okay? So it is something to pay attention to. If you're bullish, what you'd want to see is price to come in and consolidate and then potentially take a swing to break above this 300 volume shelf profile from this all-time high to potentially start heading higher to get back to these levels. That would be something to watch. But remember, if Tesla's going to start coming down, we got to understand that the Qs, right? This makes up a big portion of the S&P 500, and the Qs, if this starts coming in, it's going to be hard for obviously the big index products to perform. Another one is Google. Google has a potential head and shoulders type pattern here on the daily time frame. A measured move of this would bring us down to around that 110. And if you're really paying attention, that's prior area of resistance, prior area of resistance. You saw price action expand and then start to coil up very tightly here. And we saw a big move. So perhaps if we do come down here and we're still above a year-to-date anchored VWAP, this could be a potential opportunity to add if you're in long-term positions or if you want to trade it too as well. But that is something to pay attention to. Remember, like this could also be a potential bear flag, boom, and we come down, touch the quarter to date, maybe that holds, and we just go right back up. That's always a possibility too. Now, from a rotation standpoint, I want to call out, this is the big mega cap names relative to the S&P 500. So Meta still, above its 50-period EMA and still in a straight line to the upside. Apple relative to SPY starting to neutralize and go flat. Okay, NVIDIA still way above, right? Google, right, just now crossed underneath the 50-period EMA from a relative standpoint, and we just talked about that here on this absolute chart, right? So if this starts breaking down, that would make sense because we are seeing it from a relative standpoint start to weaken there. Microsoft is rather neutral, right, but it's still above an inclining 50-period EMA, and Amazon is also neutralizing, and you're starting to see Netflix roll slightly there, but still way above a 50 inclining EMA, and then Tesla too, obviously, just a little sharp movement to the downside today, but it's still doing quite well. Now, if I were to look at safety ratios, take a look here. This is, gold relative to SPY, utilities, consumer staples, TLT, DEF, which is a defensive ETF, and then healthcare, XLV. What I'm seeing here is this. You're starting to see relative to the S&P 500 start to curl up, right? These have been beaten down. We actually talked recently about actually XLP relative to XLY in a prior video. So we're starting to see these curl up a little bit to start to flatten out. So that's what I'm saying about a potential rotation into safety names. And if I bring up an RRG, a relative rotation graph, and we're looking at a 10-day trading period, you are noticing longer, thicker tails in consumer staples and utilities into that approving sector. Meanwhile, the top three dogs that have been performing really well, we're starting to see these rotate into weakening like XLK. XLY is still in a leading quadrant, right? But if Tesla keeps getting hit, you can start to see this rotate out, okay? So that is going to be something to potentially watch. Let's hop into the S&P 500. Okay, I want to call out a few things here. First, yeah, we're seeing a little bit minor of a pullback, right? Is this going to turn into something bigger, or are we going to be like, yay, we're back, and then it's going to go? We'll talk about seasonality, how that looks. But as it stands now, the high for the year is 443.90 cents. The all-time high over here is at 479.98. Now, I put a volume shelf profile right over here to the all-time high, and you can see when we broke through that volume shelf, we saw an explosive move to the upside. So these, if you think of it as a distribution curve, these can act like magnets, all right? So if this is going to act like a magnet, would you be shocked to see price eventually pull itself back into here? Now, that would be a large move, and it would flush out and scare a lot of longs. But remember, we talked about these levels yesterday. If it comes into this area, it was prior resistance, prior resistance, prior resistance, resistance, one broken, boom, can become a potential level of support. And we have not really had that back test yet. We also have the August high right over here. So if we start seeing some sell-off, it might not be just an easy straight shot down, but we'll tell you here on the 15-minute time frame what you need to watch out for from an intra-market perspective, or intraday perspective rather, to what you want to see. Now, we've been talking about the 5-day moving average on the SPY. We said it was inclining. If price gets below it, watch for it to go neutral. It is going neutral, right? If you remember the 4 stages of the market structure, originally, I think, created by Stan Weinstein, you have accumulation, you have markup phase, you have distribution, you have decline, and then back again to accumulation. Okay. So what we're seeing here, if we think of this as just in terms of a 5-day moving average, this is inclining. This could potentially be where the distribution phase is going in. And the longer that the SPY stays down, this is going to start going into a decline phase. So what we need to pay attention to here is, hey, we're starting to see the trend neutralize. So if you want to be bullish, let's get price back up here and this to start turning back up to make it a lot better for buying dips to potentially see movements to the upside. All right. Today we hit our daily expected move to the downside. I will update this to show you what it looks like. I believe I did. Oh, did I not update the daily SPY? Oh, man. All right, that's okay. I'm going to tell you what those are here on this video. I sent them out every day to my Patreon group. So I will tell you right now, the upper daily expected move is 437. So that's right at about this area, or no, it's actually more right around here. So upper daily is over here, 437. And then we have 432.50, which is just slightly under here, which is actually more around the month to date anchored VWAP. So that is going to be those expected moves. So if I'll post them on my Twitter, right? So in my description, I have a link to my Twitter account. So if you want to see them, I will post the daily expected moves because I forgot to do so. Now, from a daily market or from a technical standpoint, what else do we got going on over here? Well, we came down to just about the weekly lower expected move, which is at 434.21, still an open distance to potentially get there. So if we come and break this tomorrow, we'd be outside of a weekly expected move. Remember, 68% of the time. That is an 8. We close within the weekly expected moves. Same with the daily expected moves if you think of it as a distribution curve. So if it were to come down here to this 432.52 range, which would be around the month-to-date anchored VWAP, and you know that from a statistical standpoint, we close within the weekly expected move 68% of the time, this may potentially be an opportunity. If price were to get down here, we would still have a potential positive divergence to play it back into the weekly expected move from an intraday perspective. We might not get down there. If we don't, well, you want to reclaim the week-to-date anchored VWAP. We slightly got up there today, but it didn't hold. That's very commonplace to see. What you want to pay attention to is the slope of the anchored VWAP. It is declining at this time, which gives it a higher likelihood of reversing course. So you want to get above it. You want this to start turning back around. Okay, cool. Also, what else do we got going on? Well, look at the structure here. It's a potential head and shoulders pattern, okay? So we're going to zoom out to see what a measured move be, and it might not be a straight shot down, but what happens if we do get a measured move? Where would the target be for the SPY? And that would bring us down to around 425, right? You measure from the top of the head to around the neckline, and you bring that from the neckline down, brings us to around 425. That would be the measured move. And if you look to the left of the screen over here, that's where some other price action is, where it could act as potential support. Now, if I go to the daily time frame and we look at, okay, well, where's 425? It was right in this area. So if we just go to the left, well, that would bring us to where that price action was. And then also to note, we have this subtle gap right here that sometimes gaps can act like support and potentially bounce from these areas, okay? So all within this little area, which we discussed yesterday, this high over here to this little zone in here, could be potential opportunities to, yeah, if we get some scare, but maybe, you know, if price action wants to continue this movement higher, that could be an opportunity, all right? That's a potential path. Doesn't mean it's going to happen, but it's something to watch out for and plan for if you see price come into that area. And if you continue to watch and subscribe to the channel, obviously we're going to be talking about where stop losses might look to be if price actually gets down there, if it gets down to there. Let's look at the Nasdaq 100. So, yeah, little subtle pullback, but we're still in bullish context. All the moving averages are still pointing up. Pay attention to the 20-day moving average right there, right? So we've undercut it, boom, we undercut it, but we started moving higher. So always pay attention, right? It's still inclining, so we might look for a reconnect there, and I'll tell you what that might look like, because you can see here we still have that head and shoulders type of pattern forming on the 15-minute time frame. Today, guess what? We tagged it pretty much to the penny the lower weekly expected move. And then we started bouncing from this area, and we did close outside of the daily, right? We reconnected with the daily expected move, which was right around here, and I did update this one, and then it started selling off. So the daily expected move going into tomorrow is 358.78 to the low, 365.02 to the high. So if price action does continue to break down here, or we do have a little bit of a bear flag, right? Bear flag over here. So boom, measured, boom, a measured would bring us to just around the lower daily expected move. Okay, and that would be also in line with the monthly anchored VWAP. So if we do come down here, just be aware, see how price trades within this area, and it might open up a trade for potentially playing back into the weekly expected moves. But you got, like I said, you got to be careful, and you got to be very tactical here because we're below that 5-day moving average. It's starting to neutralize, right? So if you want to be more bullish, you'd want to obviously see price start to turn back around. Now, where would a measured move be of this breakdown if it were to happen? Well, where it would take us would be right at around 347.50. So if we do get a measure, the measure move of this flag, boom, it comes down to around this little area, that 357.50, right? That's where it was. Yeah, well, 358, so it might undercut that a little bit. That's where the lower daily is. Okay, I drew out a potential path here. What would the 5-day moving average look like if price action doesn't get back above it? Well, right, we're inclining, right? So right here we were inclining, we neutralize, we continue the incline phase. Now we're starting to roll over as it stands. So if price doesn't recoup right up in here, this can start to continue to roll over, and we could potentially go meet a measured move, which is around 347.50. And well, this is good, would be technically reconnecting, right? Bringing back down into the 20-day moving average. And what you would look for is a potential U-turn, right? Price action maybe undercuts it, just like we saw here and here. And then we start to head back up. So that would be the opportunity potential that I'd be looking for. And then always keep in mind, if we don't go down further, you'd want to get above this high, then above this high, and then obviously above this high, right? We're having boom, boom, price action put in lower highs, okay? And lower lows on the shorter time frame, okay? Now as a joke, I did this also on Twitter where price action might undercut it and then just fly up higher, and then the 5-day moving average might turn around. But it's not necessarily a joke, because if you do pay close attention, we have this potential pull here, then you have this down sloping channel, right, that acted as resistance, 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 support, support. So if we do pull back down, we just be coming to the bottom area of this channel, which is in confluence with the month-to-date anchor VWAP, and you never know, turns right back around and this thing continues its uptrend, okay? But you'd want to see the 5-day moving average get recouped to be a little bit more bullish, and then you, not only that, you want to see it start to incline. A lot of the times, if it's declining, you can see price action get above it, but because it's declining, you know, it takes a while to recoup, and you can see movements like this where it kind of just shoots above and comes down. And then what you want to see, if it shoots above and comes down, you want to see it eventually, you know, base out and then start moving like so. We're going to finish off with a couple indicators, then I'll go into the seasonality chart. We started to get the curl there on the summation index, but we're still in a bullish trend here on the summation index, looking at the parabolic SAR. That's for the Nasdaq. Okay, we did have some negative breath come in today, and obviously that came on a little bit of sell side activity as well. If you take a look at the NYSE summation index, also starting to flatten out, curl slightly there. We talked about the negative divergence right there as well, but we're still overall in that bullish context. So this curl might be the start of potentially the parabolic SAR cashing up, and then we might see that potential change in trend. Now, to wrap it up in the conclusion section, I want to just talk really quick about seasonality. We're moving into the 15th and 16th day. This is a chart by Almanac Trader, and this is where you typically get seasonal weakness from a pre-election year standpoint. Those are the dash lines. Okay, so if that is the case, you typically go down a little bit. However, we've been saying just be aware. You know, we have potential quarter to date markup, and then all of a sudden you get a few days of sell side activity, and then boom, we start to move up higher. And we are moving into a period of weakness from July all the way till November, where from a pre-election standpoint, you see something like the Nasdaq kind of just trek sideways with some peaks and troughs throughout the way. That's all I got for you on today's episode, everybody. Have a wonderful night.